Hello and welcome back or welcome to the channel. Exciting last 12 days. Last update was about 12 days ago, I believe April 30th. Let's quickly go through the update here. I've maybe skipped a couple of days of data here, but most of it is here anyways. Very exciting, very exciting. As you can tell, I'm up 1.7% at this point in time, and this is since January 12th. And in the same time, S&P 500 has returned minus 18%, and it's still crashing along with other markets. Not only am I preserving my capital, staying in the green, properly hedged, and once again, this is what I'm trying to do over here on this channel is I'm trying to show you my process, how I do it, how to properly secure your portfolio against what's been happening in the markets lately. If you're serious about investing, you have to do it like this. Like you absolutely have to. Okay? I mean, there might be slight variations of this process, but what you see in front of you is what you need. You can make your own. This is mine. It's a year and a half of my work, and it's a work in progress. The newest thing is the cash over here. I just want to see how much cash I have available on hand. I've been raising cash lately. As you notice, my positions have been disappearing. That's due to the fact that we are in a very volatile market right now, and it's time to take opportunities. At the same time, it's time to preserve your capital. Make sure that you have everything set up defensively, first of all, because we are in a downturn. We're heading into a well, a recession's already here. We're heavily inflated. The Fed has raised and raised and raised the rates again into a slowing economy, which is a recipe for a disaster. So I've been set up negatively ever since about February. I was a little slow. This thing started there was signs of it in November, and it finally started happening about mid-January, I believe, beginning of the year, and it's been a downward slide. This is a big one. Um, and while the market's been falling for the last couple of days or three, I've made good money. Okay, so let's go there. So once again, I'm just sharing with you my process. If you want to learn something from it, go through my videos. If you don't want to learn, just click off. I really don't care. Let's go through my whole thing anyway. As I've been saying, volatility's high, VIX is above 30, and it's been sitting there for a while. You don't want to be long-term investing right now. You want to be as much cash as possible because there's too much volatility. You don't want to expose all your capital to this. You want to go in and out short. Pick your supports and resistances and use them. The S&P 500. The S&P, like I've been saying, it's been crashing. And so we're currently almost at 20% retractment. That confirms a bear market. This is where a lot of big institutions will actually go in huge. So things are about to get exciting around this mark. Okay, that's coming up. The yield. The yield, it's been choppy, but it looks like it's going up. There's a possibility it will invert again, which is not good. Usually when it inverts like in this area here, and it lasts a couple of days and it goes away. This is exactly what happened this time. We were down there for a couple of days, and if it inverts again, that hasn't happened for a while. And that's a recessionary signal, like no tomorrow. US Canadian, since I am in Canada, I trade with US dollar. There it is. It's been going up. The US dollar's been climbing against all other currencies and Forex, which I don't actually keep track of over here, but I do have Forex as well accounts. I trade the pound against the dollar, the euro against the dollar, USD Canadian, and the Jap yen. Why? I'm shorting all the other currencies. I'm going long dollar because dollar's inflated, it's going up, and that's just that. Gold. Gold's been correcting. I mean, from above 2000 in March, we're down to 1850, and it's on a downward slope. It's being suppressed. Silver, very much the same story. Precious metals, copper, and oil. Oil's been like your number one thing, like slow and steady, like a turtle, but it's up for the year, and as you can tell, last quarter is actually 20% almost, which is great. Today's change was 5.79, and it's going to go up. Here's something that is really exciting about this week. My gold, long gold and short Coinbase has gone through the roof. This is actually a first on this channel. I've seen this happen before, but this is the first time that it's actually happened ever since I started recording these. And as you can tell, my ratio, or some people call this the spread, has spiked. And that's due to the crash of the Coinbase. I got in on this a little late. Coinbase has been crashing for a while, but I got a wind of it just recently. I've had this open for 15 days now, and it's returned nice. I mean, profit on the straight, currently it's 690. Coinbase profit is 750, 768, which is amazing. I love that. I'm short, I'm long gold, and that's been correcting, but that's my hedge, and I don't care if that goes down. Overall, in this market, gold goes up. It's just correcting. Leave it open, leave it there. I'm still up 700 bucks on the pair. The only thing I don't have my pair on is the Playboy because that I'm long that long term. I bought that a little bit high. I probably will be able to get it maybe even below $5, but I got it at 10. I want to hold on to it because I see good things with that company. They're selling clothes now, and they're doing well. They've actually came in on their earnings for the first time right now, and I think they're going to be profitable. And next earnings are going to be phenomenal. That's what I think. PBJ, that's the food and Roku. Short technology, then food and drug, long. And I'm doing well in the Roku, not so well on the PBJ. Does it matter? Not really, as long as they're hedged. Everything is going in the wrong direction right now, so everything is going down. But as long as you hedged long and short, one of them is going to go down and make you money, and the other one is going to go down as well and lose some money. But the way I'm set up, it's usually I'm losing small and winning big. And this is the process that I use. If you don't know the process, go back to some of the videos I've published before, because now this video is about updating, and that's all I'm doing. Long dollar, short Facebook, up $78.95. The dollar position, I'm only up 10 bucks. But my short on Facebook, once again, the tech sector, it's 70.55. Modest, nothing too crazy. Not as good as this gold coin, and you see the difference here, right? You see they're both going down, yet the ratio's still speeding up. The spread is at 93.50. Not bad. GDX, this is gold miners versus Wayfair. And once again, both going down, yet we're getting great gains here because one is not going down as fast as the other. It is a down market, and you're looking for these outperformers going to the short side. You're not trying to get something bouncy. I'm looking for something with a nice ratio and nice price action, just like so. Nothing too bouncy. You want the sure thing to be on your side. And then there's my Playboy. You see what I mean by I thought I picked the bottom right up here, but I obviously haven't. They just released their earnings and they came in on par. Whatever, doesn't matter. It's good. It's not negative anymore, which was due to the fact that they've been growing a lot. They've been opening stores all over, acquiring, other, this is actually no longer active, other firms like Honey Burgett, and they have like a huge clientele in Australia and whatnot. It just, they're growing. They're growing their, not only their customer base, but they're also growing all over the world. They're developing all kinds of contracts with different people. TLBUI Group. So the fact that they lost money last year only means that they've been growing and doing a lot of spending in the expansion. And that's that. That is the portfolio. 4 hedges and 1 long only, which I'm just pretty much putting outside of the portfolio, but it's there. It's losing me money. I don't really care. I'm currently down 22%. I believe in this so much that I'll hold on to it, even if it goes down another 50%. I'll let this crash all the way to 0 if it has to, but I will never do that. This is a solid company. They have a very good business model. They're following Nike and Adidas, and those guys are very successful, and I think this is going to be very successful due to the fact that they are the only ones who have the trademark logo. And that's a huge thing. People like Playboy. Okay, and with that, I'd like to end this. Once again, summary. Let's just go quickly through the week. Unrealized P&L, so whatever's floating right now, we're at over $900. My cash is at 40%. And let's go through the week very quickly. So nothing to report on the first 2 days, up and down, whatever. And then I opened a new dollar long on May 4th. I closed Venom long with a small profit. Energy's starting not to do so well, and Venom is one of those companies that was outperforming. No longer happening though, so I closed that. On the 9th, I took a limit profit on Microsoft short. I closed the TELUS long with small loss. Doubled up on the Roku short, doubling up on the short technical or tech, and doubled down on coin short because cryptos are crashing with everything, and Coinbase is one of those way overpriced companies that you just want to short. Their multiple is, or used to be, just it's it's not worth it. And then opened GDX, which is the gold miners long. On May 10th, I opened Wayfair short position, and on the 11th is no action, just good profits. And I've been up and up over the last couple of days, and it's been great. So the S&P 500 minus 18%, I'm up almost 2. In this choppy market, I'm actually very, very happy with the results. My portfolio is being protected, and now that I'm fully defensive, and you can see exactly what I'm doing. This is it right here. My long and my short. And that's the long and that's the short, and what the stock profit is, what the risk I'm taking, percentage return, and the correlation between the two pairs or between the two trades, and exposure allocation. And then my portfolio correlation is 0.03. It's actually perfect. I don't want anything to be correlated, and that reflects that. And let's end this video with that. Thank you very much for joining me. Exciting week. One of my trades is up 39% in a day, or sorry, 37%. And that is phenomenal. That's a 50% return on that so far. Let's hope it keeps going. All right, we'll see you on the next one. Bye.